Hey everyone, welcome to this video on trading the S&P. I wanted to just take you through a very powerful concept on a very simple concept, but one which is extremely powerful, and it really relates to again moving averages. Let's just take a line. This is our 5-period moving average, and we find ourselves in a position where 95% of all stocks are trading above the 5-period daily moving average. How sustainable is that? This is a short-term indicator. It's a short-term context provider, but extremely powerful. If we've got 95% above this moving average, it's not sustainable, and we're going to see a shift back towards equilibrium, which means more shares have to move below the moving average. If more shares have to move below the moving average, what we're going to see is price moving down to support that. So the key thing is here, if you were coming into the end of this period here with a nice strong move up into the 20 average, do you think we're going to continue up, and are you replacing your trades long because we've got upward momentum, or are you going to be expecting that upward momentum to pause and pull back? Now, bear in mind, this red candle that you're seeing here, the latest red candle, doesn't look like much on the daily chart. That is nearly 1,000 Dow points in a single day. And if you were trying to go long against those 1,000 points, you would have had a world of pain. And how do we use market internals to avoid that pain and actually to capitalize and profit on it? Well, we look and we see and we measure what percentage of stocks are sitting above the 5-period and the 20-period moving average. Now, the 20-period moving average, we're still fairly low, so there's probably some more room for upside next week, but we are trading today. We are traders, not investors, and this reading here of over 95% of stocks over the 5-period moving average, at the same time that we get price running into the 20-period moving average on the daily, this becomes a situation where continuing straight up is very, very unlikely. And if you are trying to trade to the long side, it's probably going to be painful. So if you look at this on a short-term chart, what does it mean? We get the context from the daily, we move across to the short term, and we get this chart here where you can see the long wood traverse of price here. This would have been extremely painful to try and short. And yes, we get the late in the day rally, but you'll see that it can never actually get above where we started at the start of the day, and into the close we get this vicious sell-off. So, when you look at the structure of the day, you really don't want to be trying to be long, even coming into pre-hours, still selling off them. We don't want to be trying to be long in this market. We don't take out even the opening price of the day. We get a small bounce. We get a small bounce later on, and that gets crushed. This move down here is nearly 1,000 points in about an hour or so. So very, very brutal selling. And the key here is, from the get-go, we can see from these charts here, we don't want to be long the market. Guys, I hope that's useful. If you would like any further information on market internals, drop me a line. You can reach me on the website here. But otherwise, I hope that was useful. We'll see you next time.